everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in Greenville, South Carolina, and you can find all of my contact information in the show notes if you need to reach out to me for any of your real estate needs here in Greenville. Here outside of Greenville, you're about to learn, as part of this podcast, how much work I do outside of Greenville, but we'll get back to that in a second. Because I also need to remind you guys to please like the show. Please subscribe to the show. Listen, if you're watching on YouTube, I don't have a ton of YouTube followers. It would be great if you could hit that little bell to subscribe, and great if you could hit the thumbs up button to like this video. It takes 1 second. If you're on Spotify, Apple Podcasts, whatever, hit the 5-star button, leave a little review. You have to scroll down on the Apple Podcast app. If you've already done it, don't do it again. But if you haven't done it, please do. This month, the month of December, by the way, welcome to December. Crazy that we are here already. I am very grateful to be at the end of the year, me personally. It's been a year. It's been a difficult year on multiple different levels, and I need to silence my phone here. Multiple levels by which it's been a difficult year, and I've been waiting to get to this month for a variety of reasons. There's a refinance I'm doing that's put me through the ringer. There's been a bunch of other things, and I knew that if I could just get to this month, that I'd get through the worst part of it. And I'm here. We're here. We all did it. We all made it. So congrats to you guys. But I'm also grateful for this month because it's a great month for the podcast. So we've got 5 episodes for 2025 for December 2025. 5 Wednesdays, right? I've released this show every Wednesday, and here's what we're going to be doing. Today we're going to be talking about the trends that dominated the housing market in 2025. I love to reflect, all right? So I apologize if you guys don't want to reflect on the past year. I do. And we're going to do that. We're going to talk today about the trends that dominated the housing market in 2025. Next week, I'm going to be talking about my craziest stories of 2025. So you don't want to miss that. The week after that, assuming that we get the numbers in, we'll do the November market stats episode. We might flip-flop that with the craziest stories. Again, that depends on when we get those numbers from GJR. But most likely it'll be in 2 weeks. The fourth Wednesday, which will be, I believe, right before Christmas, we'll be looking back at my bold predictions for 2025, right? And seeing how I did with those bold predictions. And then the final episode of the year will be my 2026 bold predictions, which I've not yet started working on. I need to start working on those because I have no idea what I'm going to predict, but I've got a lot kind of bouncing around in my head. So really fun final month of the year from the standpoint of this podcast. And I hope you guys will be paying close attention the entire way. All right. So without further ado, let's talk about what trends dominated the housing market in 2025. It's been a weird year. And again, this is a Greenville show. So what I'm talking about here, some of this might spill over into other parts of the country, but I'm talking specifically about the Greenville trends. And that's very important, right? Because some markets are doing some very crazy things right now. We're seeing price corrections happening in Florida. We're seeing price corrections happening in Texas, some other places. We're seeing crazy appreciation in areas like New Jersey, and much of the Northeast. The Southeast has cooled down, but it's still, generally speaking, seeing appreciation. You've got Louisiana. The Louisiana housing market is basically completely crashing right now in most major cities. So real estate is hyper local, is what I'm saying. And if you're listening in from out of state, the trends that we're having here might not pertain to the trends that you're experiencing in your specific market. But I've got 10 things for you guys here that are the trends that, in my opinion, dominated the Greenville, Spartanburg, Anderson housing market in 2025. And the first, which I kind of just alluded to, and I definitely alluded to this earlier, was people moving away from Greenville and into Spartanburg County, Anderson County, Pickens County. If you're not familiar with the Upstate, Greenville County is by far the most famous county in the Upstate, but Spartanburg is not far behind, right? Our airport is called the Greenville Spartanburg Airport. Anderson is not far behind as well. When you look at some metro areas, oftentimes they will lump Anderson into the Greenville metro area. And then you've got Pickens County. These are all the counties that border Greenville County. And here's the thing that's so interesting. Housing affordability, we all know, has been a problem. Nationwide, it's been a problem, but specifically in the greater Greenville area, it has been a problem for the past few years. And as a result, people are having to go to more affordable markets. That oftentimes pushes them into these other counties. Or, Greenville County is quite large. There are some more affordable rural parts of Greenville County too, if you get away from the city, or if you're willing to, maybe live in a more up and coming area, whatever the case may be. But what has happened, what I have personally seen in a way that I've never seen before, is people moving outside of Greenville, and sometimes they want to, sometimes that's purposeful, sometimes it's not. Sometimes it's just, I can't afford what's in Greenville right now. And this has directly impacted me in terms of my business. And so I look back at this year and last year to see, okay, what percentage of my clients were in Greenville County versus outside of Greenville County. All right. Last year, 20% of my clients bought or sold outside of Greenville County. 80% bought or sold within Greenville County. And I didn't go back beyond last year because it's just, quite frankly, we didn't have time to. It's honestly a lot more. It's more challenging than you would think it is to pull that data in a way that I can quickly analyze it. But basically 80-20 split. 80% inside Greenville County, 20% outside of Greenville County. In 2025, that number completely reversed. 79% of my closings in 2025 were outside of Greenville County, 21% inside of Greenville County. And I'm telling you right now, and I'm about to get another client under contract in Spartanburg County. And a lot of these were in Spartanburg County, but I had plenty in Anderson County. I had plenty in Pickens County as well. And you'll get the occasional, sometimes people are interested in Oconee County or Greenwood County or whatever the case may be. Even those counties, sometimes people find themselves moving over there. Although usually if you're moving to one of those counties, it's not because of affordability. It's more because of either work or you want to be near something out in those areas like Lake Greenwood or something like that. But long story short, the housing affordability thing, pushing people out of Greenville County, this is a real thing, right? And this is for my personal business, obviously, that I am notating this, but this is something that is undeniable, a trend that is happening. And this is why I keep harping on housing affordability, and why Greenville County needs to do more to try to make housing more affordable, not just from the standpoint of subsidized housing, not just from the standpoint of workforce housing or anything like that, but from a market rate housing standpoint. There are things that the county needs to be trying to do, and quite frankly, they're doing the opposite of those things for the most part. And so I'm going to keep mentioning it because it's a problem. It's a big problem right now. And Greenville County, it's great. The reason why housing affordability is a problem here is because there's so much demand. But if housing no longer becomes affordable for police, for firefighters, for teachers, then what? For the people that actually make our area great in so many different ways, what then? Because I'm hearing some people say they can go to Spartanburg County and become a sheriff in Spartanburg County, get paid more, and have a lower cost of living than what they can here in Greenville County. Yikes. That's not great. And that could have a ripple effect on this area that we don't even know. We don't even know exactly what the impact could be, but it could have a huge impact, and it certainly wouldn't be positive. So that's one of the trends. I don't want to be overly negative here, But that's the reality. I've been driving all over the place. I think I told you guys recently. I had I had to do a drive recently between Belton and Roebuck. Took me over an hour between showings. I had to do another one between Moore and Marietta. That was like an hour and a half. And I like to drive. Don't get me wrong. But it's crazy. It's crazy, and I have to be experts on all of these different markets because that's just a part of the job. And so it always cracks me up. And I apologize, I've said this before, but it cracks me up when people are just like, well, how well do you know this area? And they'll have like a very specific area. And it's just like, I know that as well as any other realtor in this market, if not better. Okay. The suggestion that realtors in Greenville are like very, very specific. Now, you do have some people that are just like, I'm the most prolific agent in this area, or I'm an expert in the Augusta Road area, or whatever the case may be. I'm not saying that there aren't local, very specific experts, but generally speaking, everyone has enough knowledge that they can, any experienced realtor in this market is capable of doing a transaction and knowing what they're doing all throughout the upstate, right? Unless they have niched down so far that they really can only handle a very specific type of market, which, for instance, some luxury agents, you would, that focus on luxury housing, you would never want them to do, for instance, investment properties, right? They would not know how to help you with like duplexes. I had an agent recently that asked how to search for duplexes in the multiple listing service. This was not an inexperienced agent. They had never ever done a search for a duplex in the multiple listing service in like 10 plus years of being in the industry. That's insane to me. That was one of the very first searches that I did. And not to mention that it's very easy to figure that out, that, without having to ask people. That's a whole nother thing that cracked me up. But anyway, this is going off the rails. Let's go on to the second trend here. The second trend was weird things in the job market messing up people's plans. Things like the Department of Government Efficiency, right? That Doge, that Elon Musk started with. I guess it's still going. I had clients directly impacted by that. People that had government job placements that got frozen as a result of that. I have had clients who have had layoffs, right? People don't realize it. Layoffs are back. This is one of the things that has helped me to see, okay, this economy is weird. It's not great, right? Everyone focuses so much on the stock market, and it's like, well, the stock market's the economy. And it's like, no, not entirely. The stock market can be a gauge of the economy. I'm not going to say it's not. But people have started to get laid off a lot more this year and in recent months. Of course, you've had government layoffs too. I just referenced Doge. There's been other related government layoffs, and we had the government shutdown as well. That was a weird thing. That impacted some of my clients, and that impacts the housing market too, right? All of these things impact the housing market because people don't like to buy a house when they're when there's like weird stuff going on, right? When there's a new president in town shaking things up, when we've got government shutdowns that we don't know what the end result is going to be out of that. One thing, for instance, when you have weird things happening in the government, there's been talk of changing the 1031 exchange, which is a very important tax deferment tool that investors use. So I know for a fact that a lot of investors have been like kind of waiting on the edge of their seat to see what's going to happen with regard to the 1031 exchange. Right now, it's still here, right? We can still use it as a real estate tool. Will it be here forever? We don't know. But these are the sorts of things that people will hold back. They'll hold back and say, I don't know. I had another client that they were thinking about, having, they do a lot of travel. They wanted a home base here in Greenville, and they decided that with all the political stuff going on, they actually don't know that they want to even own real estate in the United States right now. Now, you might think that's crazy, right? That might be the opposite conclusion. So a lot of people do come to the opposite conclusion, be like, well, no, I don't want to have my investments in these other things. I want to invest in real estate, something that holds value, and that has use and value no matter who's president or who's in charge or what happens in the world. So there's been a lot of weird things with regard to the job market, the economy, the political situation in our country. That's definitely been a major trend in Greenville, outside of Greenville. Another one has been buyers kicking tires and hoping a unicorn appears. Listen, I have seen this over and over again. I'm getting a Zoom notification. Turn off Mac OS reactions to prevent Mac OS's Zoom reactions from being generated. Sorry if I don't know if there was some kind of a Zoom reaction that just happened. I apologize. Let me click that button and I will turn that off. There we go. Apologies for that. Buyers kicking tires. This has been like one of the themes of this year for me, for a lot of people, has been basically there's nothing in the market that buyers can afford that they want. And so, they'll look at a house here, they'll look at a house there, they'll try to make this work, they'll lowball this property. No, can't get that. All right. Well, what about this one? No, that house isn't going to qualify for FHA. Well, let's just try. And then FHA appraisal comes back. The seller doesn't want to make the FHA repair. It's just been one of those years of just a lot of strange things like this happening. And just buyers buyers wanting to move, but just not having the options that they think that they should have. And then the end result is they just kind of kick tires here and there. And like I said, hoping for a unicorn to appear, but the unicorn never appears. And so then eventually the buyers reach a point where they're just like, okay, we have to move, right? For whatever reason. Maybe they're running out of space. Maybe they're renting. They've got a terrible landlord, landlady, whatever. Eventually they reach that point where it's like, we have to move. And then they finally do. But this has been the year of the tire kicking. I think 2026, a lot of those tire kickers are going to become actual buyers. But we'll see, because so much depends on the economy and all these other trends that are in play here. On the flip side, sellers, I've been seeing kind of similar. Sellers being indecisive, right? Should I sell now or should I sell later? Should I list my house before I've found one to buy? Or should I find one to buy first and then try to list my house and make it contingent on the sale? Should I pull money out of XYZ account in order to put towards a purchase before I sell? Should I maybe not sell? Should I rent my property out? Should I list it, or should I try to just sell to a close relative? Should I sell as is, or should I work on? I mean, I'm telling you, I have never gotten so many questions like these from potential real estate sellers. It's insane. They are constantly just indecisive. And again, it's because it's just not clear cut anymore, right? It's a lot harder to sell a house than it was 3, 4, 5 years ago. It's taking longer. If you just bought your house the past couple of years, it hasn't gone up in value that much. There's sometimes appraisals are coming back with weird conditions and whatnot. There's just a lot of buyers out there need to sell their home in order to buy a house. So if you're selling on the open market, you might run into one of these situations where you're having to accept a home sale contingency. And there's just a lot of these things going on right now. Another one, we get to the need for sellers to make repairs. A lot of sellers are just like, well, I'm not going to make any repairs. And it's just like, you kind of have to. Like, this is not the kind of seller's market that we had a few years ago where you could just say, as is, that's done. And you can just sell a house. You can find a buyer that's just like willing to take it as is. The market's not like that anymore, unless you're selling for pennies on the dollar, which most sellers aren't doing. So indecisive sellers, very similar to buyers kicking tires as well. It's been a challenge for sellers to figure out what to do. On the investment side, I have seen substantial and have heard chatter about investors really pulling back. I mean, this is a real thing. Mom and pop investors. I'm not speaking about institutional investors. That's a different thing. Okay, these big corporations that buy up homes. I'm not talking about that. I'm talking about mom and pop investors. A lot of them, I mean, I can't tell you how many that I've spoken to, that I've dealt with, that these past couple of years have crushed them, and they're done. They're just like, until, so some of them are saying that they'll never get back in, and back into doing a lot of house flipping, back into buying up a lot of rental properties. Some are saying that. I don't know if that's true or not. I can't speak to, when the market changes, sometimes people go back on their word. But for sure, the way the market has changed the past couple years has had the end result of investors deciding, a lot of them, listen, I've gotten hosed the past couple of years. I no longer know what to expect. And I speak as someone that I flip a few houses a year typically. It's been hard for me to, I'll pull, I'll see an opportunity that's out there. I'll pull up comps. There's no comps. It's like throwing a dart and hoping that if you're not an experienced dart player, just hoping that it lands somewhere good, right? That has been what flipping houses has kind of been like the past year. Hard market to do that in. And every market has different things that are easier and harder. I've found that sellers markets are the best markets for flipping houses in, but it's hard to find the deals in a seller's market, right? Right now, there's a lot of deals. Like, let's be honest. When I'm looking at homes coming on the market, I see a lot of deals right now. But they're not deals for like where you can flip the house, right? They're just deals where it's like, man, that's a lot cheaper. Like, eventually, that home is going to go up quite a bit in value. And basically, it has not gone up in value the past few years. That's a great deal, right? You can buy a house basically, if a house hasn't gone up in value or a property hasn't gone up in value the past 2 to 3 years, it's actually gone down in value, right? Because when you talk about from an inflation adjusted standpoint, it has actually gone down in value. And this is one of the big debates that people have over whether real estate should be viewed as an investment or not, because, oftentimes it doesn't keep up with inflation. That's not a debate that I'm going to get into here. Historically speaking, it does outpace inflation. But in some cases, it hasn't the past 2 to 3 years. Like, let's just be honest about that. And investors are taking note, and investors are pulling back. Here's another one. Sixth trend that dominated the housing market in Greenville in 2025 was buyers having their home of choice just out of reach on their budget. I mean, I can't tell you how many of my clients, if they could have just qualified for another $25,000, for another $30,000, if they could have just gotten a little bit of help from their parents, a lot of their parents sitting on all sorts of cash and being unwilling to help for whatever reason, right? The boomer generation is not proving, generally speaking, and I'm not trying to make a statement against if you're a baby boomer, you might be different than this, but generally speaking, baby boomers are developing this reputation now for hoarding stuff. There's articles being written about this. I was just reading one recently, and they're hoarding all the stuff that they think that their kids will want. Their kids just want a house, right? Their kids just want a place to live. That's the best way if you're someone that you have a kid in their late 20s, early 30s, maybe even mid or late 30s, right? That don't have a house yet. Help them out, right? But this is the thing that I keep seeing over and over again. Not to get off on that whole tangent, but so many buyers they're so close to being able to afford what they really need. And what I mean by that is, like, let's say you've got a family of 5. And really, well, let's give a better example. Let's say you've got like a family of like 6 to 8, and you really need 4 bedrooms, right? You you can kind of squeeze into 3, but you really need a 4th bedroom. You just can't afford it. Like, everything that's in your budget is just 3 bedrooms, so you just have to settle, right? That's what I keep seeing over and over and over again, and it's hard. Now, this market, there have been some opportunities, and I've successfully gotten clients under contract in situations where we've been able to get, identify an opportunity where, maybe a house was on the market for a long time, and we're able to get them to come down into the price range that the buyers can't afford. But oftentimes that just isn't the case because there's not a whole lot of great inventory that's out there. There's a lot of inventory, but not a whole lot of great inventory that's out there. And so this has been a big problem, like buyers being just out of reach financially of being able to buy the home that they would like. Going back to sellers here, number 7, I've run into this a bunch, is sellers having unrealistic expectations and beliefs in their home value. Now, we've talked about this before, right? Sellers always think that their home is worth more than it really is. But in this case, I have run into multiple times that sometimes there's just a lack of comps, right? We're trying to find comparable properties to compare to. I've seen this more so than ever this past year, where it's like looking at comparable sales and it's just like, there just aren't any. Like, again, trying to throw a dart at a price, and trying to, I've had to get some pre-listing appraisals this year for properties that you typically wouldn't do that for because it was so challenging to price them. Typically you're only doing that for like really, really, expensive properties, luxury properties, or properties that have some sort of oddity to them. I've had to do this for some cheaper properties, and I don't like to do that, right? As a real estate professional, I have access to a lot of information to be able to assess a property value, but sometimes it's hard, and sellers are always going to fill in the gap, right? Fill in the gap. Okay, there's not a lot of comps. Well, here's what I think my house is worth. It's worth $750,000 when it's definitely not worth more than $650,000, right? You can, within reason, you can kind of figure some things out, right? But that's the kind of stuff that we're dealing with. And I referenced before having to get pre-listing appraisals. I've seen situations where even pre-listing appraisals have been flawed. I saw one recently where a home now this was more of a luxury listing, but it had come down like $200,000 in value, and they had gotten a pre-listing appraisal from a good appraiser for the number that was that it had initially listed for, and then they had to reduce about $200,000 from that number that it appraised for. So it's a really, really challenging time from the standpoint of being able to determine home values, because the market has just done weird things. I think I've referenced this a few times on here. Markets actually picked up a little bit in the fourth quarter in a weird way. And that has also caused some like, okay, well, what does that mean? Nobody really knows necessarily. Definitely mortgage rates have come down a little bit the past few months, and that certainly has impacted some things. But there's just a lot of trends that are being bucked right now. A lot of and part of one of the trends that has dominated the housing market is traditional trends being bucked, right? That's not one of my 10 things, but that's something that we've run into just a tremendous amount. And sellers have to come into, if you're looking to sell your home, start with, okay, I need to be realistic. This is not a market where you want to overprice your home. You overprice your home, you kill it. You kill your home. You kill your listing if you overprice it. No amount of marketing can fix an overpriced listing. It's impossible, right? The market determines what your home is worth, not your list price. Your list price doesn't determine what your home is worth. That's a common misconception that sellers think. They think that they can speak a number into the air. I mean, can't you just list it for $450,000? Like, what you're saying it's only worth between $400,000 and $425,000? I mean, let's just try $450,000. No, it's a bad idea. I talked about this years ago. I did a whole study on what happens when you overprice a home. It's awful. You lose tens of thousands of dollars when you do that versus just pricing it correctly. Versus pricing it cheaper. You lose tens of thousands of dollars by overpricing it versus if you had just priced it right the first time. So please don't do that. Number eight trend, contractors and realtors engaging in shady practices as their bottom lines get hit. Listen, I have seen some shenanigans happening the past few months, the past few weeks. There is a lot of shenanigans happening with contractors, realtors, even appraisers. Weird stuff. People are being affected by this economy. Mortgage lenders, they've been crushed more than anyone, right? For a variety of reasons. Refinances have more or less gone away. Home equity lines of credit have more or less gone away. A lot of with the influx of new construction closings in our market, a lot of these builders have their own lenders that, if you don't use that lender, you're losing out on all these crazy incentives. And yeah, the result is when people's bottom lines get hit in a negative way, they start doing shady stuff. And I have seen a lot of shady stuff. Be very careful dealing with contractors and realtors right now in this market because they are looking to, I'm not saying everyone, obviously, but there are a lot of them pulling shady stuff right now in order to try to make a quick buck. And I'm going to talk a little bit about this very soon, probably as early as next week when I do my craziest stories of 2025 episodes. So make sure that you listen to that. I alluded to this one, but number 9 is new construction taking over for most budget-conscious buyers. This might be the biggest trend out of all of them. Well, probably the first one, where people moving out of Greenville and into the surrounding counties probably is bigger than this one, but this is close. And we've talked about this a good bit. We had a period of the year where it was cheaper to buy new construction than it was to buy an existing home sale. Now that inversion in the chart, it has gone back to normal where new construction is back to being the more expensive option, which is what it should be. But it's not that much more expensive by much. And so it's just over and over and over again. People looking at all the options that they have and concluding, why would I buy this home that's falling apart? The seller won't come down on the price. And they saying that they don't want to do repairs. And I can buy a brand new home for $5,000 more. Or for most of the years, for most of 2025, for $5,000, $10,000, $15,000 less. And they're offering me a 4.99% mortgage rate when the average is per Mortgage News Daily is like 6.3. Yeah, I'm going to do that. That has been a huge trend for 2025. And I don't know if that's going to stop anytime soon. People are tired of new construction. Like very few people go into their home search saying, we really want new construction. Some do, but a lot of them that, their ideal scenario is to go into a neighborhood that has mature trees, no HOA, is in an established part of town, all of that kind of stuff. It's just too expensive, right? They just can't afford what it costs to buy a home in those areas. And so they end up in a new construction development. And the hope, a lot of them hope that, well, we'll get this, we'll stay here for a few years, and then maybe we'll have enough equity and we'll have enough money to be able to buy our next home. Be careful. I've talked to you guys about this one too. When you buy new construction, you need to be prepared to live there for a minimum of 5 years. A minimum of 5 years for new construction, because it may not go up in value. Builders have even started putting into their contracts things like we may change prices in our community in a way that hurts your home value. They've done that. I have past clients that bought in new construction neighborhoods, and then right after they buy, prices go down. they have immediately, their home immediately goes down in value with the rest of the neighborhood. It's insane, but it happens. You've got to be prepared for that. You've got to be prepared if you buy new construction. That's not a place where you're going to be able to be guaranteed you're never guaranteed a home's going to go up in value over any period of time. But the most likely scenario is for this area, right? This market should continue to appreciate in theory. But new construction, give it at least 5 years. Be prepared to give it at least 5 years. My number 10 and final trend that dominated the housing market in 2025 is, and again, I alluded to this one too, but activity in the Upstate bucking the usual seasonal trends due to mortgage rates coming down in the second half of the year. Crazy time this year from the standpoint of mortgage rates, right? Let me pull up Mortgage News Daily. Here, I'll actually, if you're on YouTube, if you've endured with me to this point, you deserve to see more than just my face here on YouTube. Here's what I frequently look at when I'm trying to assess what's going on with mortgage rates. Mortgage News Daily, it's a nice average of what rates are doing. And so you can see, rates peaked in January of this year for 2025. That was the peak, was January 13th. Again, according to Mortgage News Daily. They started to come down through April. Then when all the tariffs and whatnot really started to get crazy, they hopped back up above 7%. And then basically since, when was this? Basically since the middle to end of May, they've started coming down. And they did not go below 6.5%, again, per Mortgage News Daily, until September. Well, guess what? It takes usually 6 to 8 weeks for buyer behaviors to change based on mortgage rates. And change they did. Once we got to that 6.5% number, give it a couple of months later, here we are, right? And I just told you that we've seen an uptick in buyer activity in the fourth quarter of this year. This is why. This has caused some of the usual seasonal trends, and I'm excited to see when the November market stats come in a week or so from the Greater Greenville Association of Realtors, what the month of November ended up looking like, because I think we're going to see some usual seasonality, right? Because real estate's super duper seasonal. I think we're going to see some of the usual seasonality not follow the normal trends, and that should be really, really interesting. And again, it's all because of the rates. It's all because of the rates. So we actually got all the way down to 6.13. Yeah, we've gotten down all the way to 6.13 twice, and then it's bounced back up. And one thing I heard someone say yesterday that the Federal Reserve is going to cut rates, and so mortgage rates are going to continue to come down. That is not a guarantee. Okay. What the Federal Reserve doesn't directly impact mortgage rates. What does directly impact mortgage rates is the 10-year Treasury yield, and that we can track that very closely. And oftentimes that does come down when the Federal Reserve brings down their rates, but it doesn't always, because bond traders can disagree with the government. Shocker, right? Investors disagree with the government. If they think the government is cutting rates when it shouldn't, they're not going to pump money into treasuries. They're not going to do it, right? If they feel like our debt position is bad, if they feel like our economy, that we could be in a situation where debt-wise or in other ways with regard to government spending that we're not in a good place, they could stay away from government debt altogether. And if they do that, mortgage rates don't come down. Now, typically, when the economy gets bad, and it appears like it's worsening right now, typically that means the people do start investing more in treasuries, and that does bring down the 10-year yield, which would also bring down mortgage rates. But we're in odd times. We're in very odd times. And we don't know if any of those things are going to happen. So we'll have to wait and see. But those are the 10 trends that shaped the 2025 housing market in Greenville and the greater Greenville market of South Carolina. Thank you guys so much for listening. Like I said, I'm super excited for all my content this month. I hope you guys are excited too. Thank you so much for listening. Like, rate, review, subscribe. Use me as your realtor. My contact information is in the show notes. We will talk to you guys next time.